Hello and welcome to TradingView. I'm here with Alessio Rastani, who is the head honcho at leadingtrader.com. How are you today, Alessio?
It's great to be here. Thanks for having me. And yeah, I'm feeling really good. I'm not sure why. Probably because...
It's because you're here on TradingView. It's very simple. Sometimes in life, things are much more simple than you think.
That's right.
Right, let's go on to the markets and see how simple they are. Starting off with the dollar index. This is supplied by King Jensen FX.
King Jensen, right.
Looks impressive, all this.
Yeah, I mean, it's hard to be bearish the dollar because one of the reasons why it's hard to be bearish the dollar is because it's because I'm bearish on the euro. I think the euro is going to continue some further downward. It's in a downward move right now, or it certainly has been. And it's hard to be bearish on the euro and be bearish on the dollar because they're inverse to each other. So I'm actually agreeing with Jensen here, King Jensen here. So I think that the dollar has more upside to it. And yourself, Zach?
I think that the Fed are going to choke in terms of raising interest, are going to choke in terms of raising interest rates.
Right.
They're not going to do it. They'll blame the US presidential election. They'll blame Brexit. They'll blame the weather. They'll blame anything for any reason. China, anything, in order to get out of that. So on that basis, I suppose.
So you're actually on the opposite side of the coin on this
Yep.
one. Okay, interesting.
But it depends. The problem is that the market, it doesn't. Not taking the view that the Fed won't raise rates is something which is it's difficult for people to do. They can't believe they're going to be, not say lied to, but misled. But the Fed is from my point of view, just playing for time and can't press the button, etc.
Yeah, it's an interesting one. So it will be interesting to see what they decide in September-October period.
But I think that's why the euro is surprisingly, near 112 rather than, it should be like 108 or 107.
Exactly. I mean, we were talking about parity only last year.
Exactly. Well, you were. But let's get that right. But the point is that the euro is a bit of a giveaway there.
Right.
I mean, the strength of the euro might be because the German economy is going great guns. The eurozone also has I think a trade surplus as well. Mm-hmm. So you've got all that going on, even that so it's actually a reserve currency.
Yeah.
And it's actually I reckon it's actually the best reserve currency.
Really?
Yeah. That's why it was nearly destroyed with the global financial crisis, because the Americans couldn't take having the euro as it was becoming until the GFC. It was going to be the reserve currency.
That's right.
Yeah, so something had to be done.
Yeah, I can see that.
And you can tell by the way that the credit agencies kept on attacking.
I'll be honest with you, it's hard to make that argument given everything that's happened in Europe, with Greece and Portugal and now Italy and all these countries. But
that for me proves how strong it is.
How strong it is, yeah, because there's been a concerted effort to make sure that Europe survives. Question is, will it do so long term though? That's a big gamble, but I think I tend to agree with you on this one. I will say one thing though, Zach. King Jensen, before we move on from this, because we spent too much time on this, but that bottom, the arrow that King Jensen's pointing out there, that blue arrow, which is I think at the 95.15 level, that level needs to hold, and I agree with that. For the bullishness to continue for the moment, I think that level needs to hold. If it doesn't, and we close below it, then those are the next levels to watch.
Yeah, I mean, we'll see that the penny drops on the Fed. That'll be the interesting thing. But presumably until September, there's a chance of the market still believing that the Fed are going to act, and therefore the dollar can be stronger. But it would be interesting to see what happens after September, really. But let's go on to the next market, which is no less interesting. I think it's a great chart. I think it's a really good. It's a great perspective on it from Zales FX.
I'm just wondering, is this a monthly chart? Yeah, it is a monthly chart, isn't it? Yeah. So that's the huge drop in 2008, 2009, and now we're there. Now, I'm not quite sure whether Zales FX here is he asking, when he says it's a kind of question mark, a huge downfall for cable. So is he saying that he's short on this one?
He's saying it's going to fall to the floor. You've got a 70 cents target on there on the implied the head neckline distance. So that would take it to what 70 cents or something like that.
Okay. Well, here's the thing. I think that and I don't know if you agree with me on this, but I think you might. Number one, what do we know? Here are the facts. The facts are recent reports, COT reports, shows that the commitment of traders reports shows that the smart money, the institutions, they are actually buying the British pound. So actually they're net bullish. They're actually heavily buying the British pound. Not heavily, I would say. I mean, that's an exaggeration, but they're definitely a 2 standard deviation buying on this currency on cable. What is that telling us? It's telling us that the smart money is not as bearish as everybody else. And we have got to be very cautious here. We've already seen a dramatic fall in the British currency. Pessimism on the British currency is at an extreme point in my view. Everybody is giving us all kinds of bearish targets, downside targets, including this one here from Zalesbeck. And he might be right. But I'm actually willing to take kind of a risky thing to do here, but I'm going to take the opposite side of the bet here. Given that the fact that smart money is buying the British pound, given the fact we're seeing this extreme move in the British pound without even a 38.2% Fibonacci correction in this fall so far, whatever that means, maybe the markets just won't respect those Fibonacci levels anymore. I am going to say that we're more near a bottom in the British pound than we are near, now I'm not saying an all-time bottom, all I'm saying is an intermediate bottom before a bounce. I'm looking for that bounce in the British pound, which we have not yet got.
The only way you're going to be right
Yeah.
is if that's a failed Head and Shoulders. But that looks literally like a work of art. And even the way it's behaved in the last 2-3 months with that key reversal to the downside, holding below support, hardly retracing any of that long candle. Let's say it went from 150 to 130. It bounced, what, 5 cents at most? Which is, it could have bounced half. It could have bounced 61.8%. It bounced not even, I think, 20%.
Yeah, but all I would say to that is that this head and shoulder pattern is something that formed over 20 years, but it looks like it can go back to the 90s. And one thing we know from head and shoulder patterns, or indeed any kind of reversal pattern, is that they tend to suffer from false breakouts. You break out that level, what happens? The market quickly, after a while, reverses. And because it's a 20-year chart, it could take months, maybe even a year before we go back above that support. And my point is that I don't think necessarily we're going to see much further downside in the British pound. We might go to 1.25 with the level I think we discussed, but I don't think we're going to go any lower than that.
70 cents. I can't wait. Right, next one.
Yeah, that would be a disaster.
Right, DAX long-term short. Punchy call here from Adam Wilson, which is exactly the sort of thing we like to see here on TradingView.
When he says long-term short, I'd like to know what Adam means here. Because long-term, do you mean by the end of the year, or is he short?
Well, I reckon he's going for failure here at 10,700, and then down to it's a long wave goodbye here with this from this post 2015 peak.
I think here's the thing. I think Adam is right about one thing. We've had a massive rally in the S&P, massive rally in the UK FTSE 100, and of course, I wouldn't say massive rally, but certainly an uptrend here in the DAX. I think he's right. We're overdue for a pullback, overdue for a retracement. I wouldn't say it's the best short in the world. Much rather short something else out there, but yeah.
You've got a line there. I think there's a chart gap as well, up to 10,700 from the beginning of the year. You've got some charting furniture there, which is useful. And
what I would say is we've hit resistance at by the looks of things, at 10,681. I would say if the DAX closes below 10,500, that level, that would be a good level to get short. But I wouldn't stand in front of the freight train just yet.
Okay,
because there may be more upside.
We're nearly out of time. Just to Silver long, straightforward break of a trend line there, test the line of support and then up. Would you want to see like $22 broken maybe before?
No, I actually think that I disagree with George on this one. The easy money in silver for the time being has been made, in my opinion. And I'm actually short, I'm actually bearish on the silver market.
Right.
Provided we close below 19.2. And I think we probably will. So we're seeing so much bullishness, so much optimism in silver and gold. But we know one thing, the smart money is betting against, heavily betting against gold. So goes gold, so goes silver. So I'm going to take the opposite side of this one. I would say if silver breaks below or closes below 19.2, short silver.
Okay, and then last one, which is another head and shoulders there, the big short, Yelkin Gul, dollar Canadian.
Well, one thing we know about dollar CAD is that it's, first of all, inversely correlated with the oil market. Canada, of course, is a commodity market, commodity country, exporter of oil. So oil has an impact on dollar CAD. Also, dollar strength, we need to something to keep in mind. So I would respectfully disagree with the short on dollar CAD, purely because I think we're going to see further weakness in the time, for the time being. We're going to see further weakness in oil, more strength in the dollar. So I think it's a risky short on the dollar CAD. I would actually be I would actually be still long on dollar CAD, purely because I'm bearish on oil, bullish on the dollar.
On that note, Alessio Rastani from leadingtrader.com, thank you very much for being with us here on TradingView. We'll be back after the break.